Hey everyone, welcome back to another video, and in this video I'm going to talk to you about pre-market preparation, how to prepare for your trading day and how to select stocks in play. One of the most important things when you are trading is to actually select the right stock to trade. Strategies are actually easy to play. I mean, if you think about it, opinion range breakout, what is that? Play the break with the 1 minute opinion range candle. ABCD pattern or bull flag, find something in the shape of a bull flag and play it to the long side. Ascending triangle, find something in the shape of an ascending triangle and play it at the break. That's easy, guys. A couple of months, a couple of weeks learning some specific strategy, you'll get used to it and it will be too easy for you to actually trade this specific strategy. The question is, what stock should I actually play this strategy on? That's the hard part. How to select the right stock to play your specific strategy, and there are a lot of ways to select the stock. One thing that you need to understand is stock selection actually depends on your trading style. You cannot just simply go and ask someone in, I don't know, a Discord server, in the trading community, or any other trading guy or trading buddy and tell them, what are we watching today? What should we trade today? That's not the way it works, guys. If you are a scalper, your stock selection will be different. If you're a momentum trader, your stock selection will be different. If you are playing low floats, also your selection will be a bit different. In this video, I'm going to explain to you how I select stocks, but I can give you also a brief information on how you can select stocks for different styles of trading. One of the easiest ways to find stocks in place, and that's what most of the trading communities are doing, is going to the gappers list. You can use Trade ID Scanner to find the gappers list. This shows you stocks that gapped up or gapped down today. And this is one of the ways that most of the traders are looking for stocks in play. If something gapped up a lot or gapped down a lot, it means that there is some sort of catalyst behind its gap, positive or negative, or there was some pre-market or post-market activity that caused it to make this move before the market opened. There will be a lot of interest from different people watching this stock, which would give it a bigger relative volume, which would cause it to make bigger moves than it usually does. And you know why we're watching stocks in play? We are watching stocks in play because a lot of other traders are watching it, which would cause the setups to be more respected rather than trading against the algos. If you are watching stocks low floats, you could set these gapper scanners with the float that is suitable for your trading style. For example, for low floats, you could set the gappers list to find stocks that gap, but they have a float of less than 20 million shares, for example. For what we are trading with bearable traders, we're trading high cap stocks because they're less manipulated, they're easier to trade, they're less spready, the moves are not scary, and it's easier to manage the risk on them. And in my opinion, if you're a beginner trader, it's better to trade high cap stocks because the moves there are more clean and the risk there is manageable. How am I selecting stocks in play? The first way, and I'd say this is the only way that most of the time I'm selecting stocks in play, is going through a list of 107 stocks that I built throughout the years of trading. There is a list of stocks and I'm going to share it with you. If you take a look here, guys, you could see that there is a list of stocks that consists of 107, 108 stocks. Most of the time when I'm building my watch list, I go through this list of stocks around here. I copy it, I paste it, and in the morning I'm going one by one through this list, trying to select the best potential stocks. You know, guys, that when trading, you need to plan the trade and you need to trade the plan. And there is no better time to plan your trade than planning it in the pre-market or before the market opens. Now that I have my list of stocks, and by the way, not only the list of stocks, you could also add the gappers list, NASDAQ gainers, NASDAQ losers, top list, and go through all the list. What are the criterias that I'm looking for to select this specific stock to play? I go by my style of trading. If I'm looking for a trend trade, if I want to hold the stock for the whole day, from the open till the close, for example, or for a big move, I'd usually be basing my selection based on the daily chart. If I want to play momentum, scalping, 1 minute open range breakout, I'll be selecting stocks based on the 16-minute chart. What exactly I'm looking for? Let's take a look here. You could see here the daily chart, and this is exactly what I'm doing, guys. I'm taking a look at the daily chart, and the first thing I'm doing, I'm trying to identify what phase are we at in the daily chart. You know that there are 4 phases for the market movement. There is the bottoming phase, and the bottoming phase is basically where the market is going sideways or basically stuck in a channel. then there is the advancing phase, and that's the trending phase, and there is the topping phase, and finally there is the declining phase. When I'm playing stocks and when I'm trying to find stocks for potential trends, obviously I'm going to be looking for stocks in advancing or declining phase, because that is an uptrend or a downtrend. And if you take a look at Apple around here, you could see that we were stuck in a phase here, which is a bottoming phase. We were stuck going sideways, and finally on 21st of August we broke it, and now we are in an uptrend, which makes Apple one of the stocks that I'd be looking for quite a few times until it gets back to a topping phase or until it's stuck in a range again. Now that I'm seeing that Apple is in an advancing phase, I go by the 3-candle rule. I'd be playing it in the first day, the second day, the third day. I'd be avoiding the pullback, and then I'd be playing it the first day, the second day, the third day, and I'd be avoiding the pullback. So basically, what I'm looking for when I'm taking a look at the daily chart is a trend on the daily chart, and I'm trying to catch the beginning of the move, the first or the second day. If I like it for a trend based on the daily chart, the second thing I'm doing is I'm going to the 60-minute chart. And on the 60-minute chart, I want to see a range. Why a range? Because I told you I want to catch stock in the beginning of its move. You could see here on the 60-minute chart that there is a range around here. But I didn't play Apple today. There is a trend on the daily chart, there is a range on the 60-minute chart. Why is that? Because of the rule number 3. The pullback should be at least 30% of the move that was done. And if you take a look at Apple, you could see that the move went from 160 approximately, or 160.50, all the way to 166, and then that is my pullback. That is less than 20%, right, of the stock's move. The pullback is not enough, the daily looks good, the 60 looks good, the pullback is not enough, better skip playing this stock. You could see here one of the stocks that I played yesterday, and that was FSLY. Why did I play it yesterday? You could see that on the daily chart we were stuck in a small range, and there we finally broke this particular range, which tells me that today we are more likely going to be trending and we're more likely going to go to the long side. Next thing I'm doing, I'm looking for a range on the 60-minute chart, and I want it to have enough pullback, right? You can see this is the whole move and this is the pullback before the continuation. Amazing, around 35 or 40%. So good daily chart, 1, good 60-minute chart, 2, enough of pullback, 3, amazing. So that is the first part that I'm looking for when I'm selecting my stock. The next thing I'm doing when I'm planning my trade is where would be my target. A good stock is not enough. You need to know how long you're going to hold on to your trend or to your move, or where are you going to start partialing or exiting. And what I do there is I take a look at the average true range. Since my selection is based on the daily chart, it means that my move would be approximately as much as the daily chart can run. And the average true range is the indicator that tells me how much the stock runs on average. And I could see here that on the daily chart, FSLY runs approximately around $1 a day. Average true range is an average, it's not a true range. So it could run $1, it could run less than $1, or it could run more than $1. And to be safe, I'll be holding it for less than $1. Check the video that I made on how to maximize profits using the average true range or the best indicators for day trading for more information on how I'm using the average true range. Now let's take a look at this. The previous day close is at 12:30. Add into it 80% of the ATR, which is 80 cents. That would be 13.10. So I know that my target would be 13.10. That is enough. Good daily chart, good 60-minute chart, enough of pullback, and a perfect target. Now I need to identify where I would be entering and where would be my stop loss. Usually my entry for a breakout is the break of a range. That is our range, and you could see it zoomed out on the 5-minute chart, and my entry would be approximately around the break of the range. We're good with that part. Finally, stop loss. Plan your trade in advance. Where would we be putting our stop loss? And the stop loss is either the last level the stock bounced from, according to the breakout webinar, the middle of the range, or the low of the previous candle. What I used on FSLY is the low of the previous candle body. There is a few wicks, but I could see that this is the level that is approximately holding. So me playing it to the long side around here could give me a stop loss at the low of the previous candle body. Or I could be using the low of the 1-minute candle, because you do not want to use a stop loss tighter than the previous 1 minute candle. So going back through this video, you can see that there are a few things that I'm deciding in the pre-market, and that is: 1, stock selection based on the daily chart, stock selection based on the 60-minute chart, where is my entry and where is my target. And there is one last thing that I'm deciding at the right moment, at the moment of trading, and that is where to place my stop loss. Sometimes the stop loss could be so tight, and that's perfect, because the tighter the stop loss, the bigger the move that you can get, and the bigger the profit ratio that you could get, or the bigger risk to reward ratio that you could get. The wider the stop loss, the less the risk to reward ratio that you can get. So if the market opens, the candles are so big and my stop loss is so wide, then I'm most probably going to be avoid getting into this trade. Why is that? If my stop loss is $1 and my target is 50 cents, I'd be risking $1 to make 50 cents, which is 0.5 to 1. That is not worth it. I want to get into a trade that offers me at least a 2 to 1. So no matter how good the selection is, no matter how good the setup is, if the risk to reward is off, just avoid it. Sometimes the stock just breaks in the very first minute and runs without me. That is also a stock that I would be leaving. Unfortunately, sometimes we do not have the luxury of the beautiful daily chart that could get us into a trend trade. So if I cannot build my watchlist based on the daily chart, I'd be going through this list and pick stocks that look good based on the 60-minute chart. And that's a breakout on the 60-minute chart or a channel trading based on the 60-minute chart. And you could see here that one of the stocks that I played today, it was PFE, and I selected it based on the 60-minute chart. Why is that? Because you can clearly see that there was a level of resistance around here, and every single time it goes into it, it bounces out of it. And there is a clear level of support around here that it's also respecting. So I like this stock based on the 60-minute chart to play for a channel or a bounce off a level of resistance. So the first thing I'm doing, looking at the daily, finding the level of resistance, which is basically my stop loss, or it could be tighter than that. And then I want to identify where would be my entry. Obviously, your entry would be closer to the level of resistance, somewhere at this stage. You do not want to enter in the middle of the channel. It's the worst place to enter. When you are playing channel, you are either playing bounces of channel closer to the resistance or closer to the support, or you are playing breaks of channel, a break of the high or break of the low. Next thing I'm doing, I'm moving into the 5-minute chart just to find the levels of support and resistance, and to find where exactly I can get my entry based on the 5-minute chart, at least approximately, to get an idea after the market open. And I can see clearly around here that this is the area that the price is mainly holding at. So I want my entry to be somewhere around here, or somewhere, as we mentioned, up here after the market open, depending on the price action. Finally, I'm going to the 1-minute chart after market open, and I'm looking for a confirmation, because I do not know exactly where I want my stop loss to be, but I know exactly where my target is going to be, the middle of the channel or the low of the channel. You do not want to play the whole channel, because the price in a channel could get closer to the middle, go back up, or go all the way down. You want to have a momentum play, quick in, quick out with a tight stop loss. So around here, you could see the first minute candle closed as a shooting star. I love it, but I'm not playing it. Why is that? Because this is kind of a bit of a wide stop for me to play. I can see the 2nd-minute candle is a doji. Decent. I could have a tighter stop loss. 3rd candle, it is about to close as a small shooting star. It's not shooting star, but it's enough of a bearish candle. Now I can get my entry. I can set my stop loss. That is a really good risk, and that is a good reward around here. And this is how I select stocks based on the 60-minute chart. Do I select stocks based on the 1-minute chart and the 5-minute chart? Definitely no, because these are really small time frames. They're having a small average true range, and I might not have a good risk reward when I am playing them. If you guys enjoyed this video, please hit the like button, share, and subscribe to our channel. If you want me to make more videos on how to build your watch list based on different styles, write down in the comments below, what is your trading style? Are you trading low floats? Are you trading high caps? Are you trading trends? Are you trading reversals? And I will help you and make videos in the future for different trading styles and how to pick the best stocks based on your trading style. That's it for today, guys. Have a good day, and I'll talk to you in the next video.